So, hello. I hope everybody's having a great weekend. This is 50 pips, and it's the 27th of October, 2013. So, I'm not making any trade calls or recommendations. You and only you are responsible for the trades you may decide to take. The fact you're listening to this recording means you've read, you understand, you accept all the disclosure disclaimers on the blog. So, guys, what's going on? Well, I'm sorry for the past couple of weeks. For some reason, YouTube's been taking a long time to upload the recording, so there's pretty much I don't know why, but let's hope it doesn't take that much to get up today. I've been recording these earlier and earlier to try and get them out as soon as possible. For some reason, it's not cooperating. So, by the way, this is a quick weekly video. A reminder, next week we've got the live 1 hour free webinar, so link will be up on the blog. Just show up, no need to register. I don't need your details. I don't want your details. Just show up and we're going to do a full 1 hour session, okay? So best way is just to put your email address on the blog, sign up for the updates. Every time something new comes out, you'll get it in your inbox. What's going on? So let's do a couple of futures pairs today too. I mean, what's going on in the ES? So the ES, we talked about all these pivotal levels on the ES, and we're just stuck right back at highs holding a bid tone. We discussed that we had a feeling that it would be healthy to see some kind of retracement, but that if we failed, we needed to fail from a higher level again. And we did get some interesting shorting opportunities last week. I was relatively active on some of them, but here it's still not, there's just kind of touch and go scalps because it's really not managing to get any traction to the downside, right? And as long as it keeps on grinding higher, it's grinding higher. I mean, even if you look at the action, every time we had these dips, it just keeps on catching a bid. So right here, what I'd be looking at, the level to the upside, my next level to the upside is 1765s. But right here, I'll just be looking very closely to see how we start the week. Any failure to hold above these 1750s, I think is going to be interesting to look for moves. Even, looking for 10-point moves down to the 1740s, but as long as it's holding above these 1750s, I'm sure there'll be people trying to buy dips, but it's not something I'll be doing. So the way I'm looking at it, I think it'll be interesting if it fails from a higher level. I'll be looking to see what action around the 1750 and on any kind of sell-off during the week. The pivotal levels remain the same. You can look at the latest recording, but on any press down, then I'll be looking at that 1740 to be key inside 1750 and the 1726 range, okay? So Crude, what's going on Crude? A lot of people asking me about Crude. We've got very interesting move on Crude. So Crude is holding, was holding quite aggressively to the upside, and then it started to let go. The big level we were looking at to the downside was that 102 that was protecting the 100, and we talked it's all about daily closes above the 102. This is a weekly chart, by the way. Once we started to close the dailies below the 102, we said, well, this is going to get heavy. We could easily get a move back into 95s. And why were those 95s that whole range? It's very interesting because if you look at this weekly, this is confluence zone, basically a support zone of the 100 and the 200 on the weekly. And what we said is even though it might still be holding heavy, we'd expect any serious longs to start taking profits into this zone. Nobody has a crystal ball, so you don't know where inside this zone they're going to take profit. But, the best guess is on approach of the 100 and approach of the 200. So far that 100 is being defended here. So what I've been looking at in Crude is going into next week is this is still being a strong support zone, and most likely the sellers trying to sell any rally back up into that 100 level to protect that 102 to try and get a press right back down into those 91s. And what the longs will be doing, will be looking to try and get it back above those 102s. As far as I'm concerned, weekly close, daily closes next week above the 102 is looking pretty constructive, I would say, for a move back up into those 110s, 112s possibly. So clearly here we're pressing in key support, so I'd be looking to maybe try and play the upside a bit, or focusing on what I suspect will be a sell zone into the 102 100s. But right here, I think, the uptrend is clearly, we've had a retracement, but for this uptrend we've talked in the past, you can look at the old recordings, to really be broken and this move to possibly test above 115s, we need to get weekly close below that 200 as far as I'm concerned. Gold and silver quickly. Gold, again, looking pretty good, pretty interesting. We discussed this daily close on gold as being probably the an intermediate bottom after this big press. This is where we said we'd expect people will look back at the end of the year and say this was a bargain price. Right here, we call this as the intermediate bottom for a move back into 1350s. We're right into 1350s, so no change really. We've got the move we're looking for. Now this is a bull bear line going into the week. As long as we close below, looking for possible tests back of the 1300, we start getting daily closes above 1350. I'm still in play for the original outlook, which is a move back into 1400s, the confluence of this descending trend line and the 200. So still in play, no change. And just to quickly, we don't look at this in these sessions that much, but pretty much the same thing's happening in silver, right? We had the initial bottom. Then when we came back here, we said, here we go. It's trying to take out stops. It fails. We got this little daily candle here, similar to gold. This is the intermediate bottom we were looking for a move back into 2250s. Bam. As long as it keeps on closing above 2250s, I'm looking for this to try and rotate back up into 2480s. If we start to close below 2250s on daily, then 2150s will come into play again, most likely. But again, this is the bull bear line going into the week. Couple of quick ones. A lot of people asking about EJ. I mean, I have no change in EJ. What I'd be saying, for me, those 135s are still attracting. 135s into 135.50s are still attracting as long as it's holding this base. So I think we've got some unfinished business in 135, 135.50. So as long as we don't start getting a daily close here below the 134s, I think we've got unresolved business here. If we fail like the ES, I feel we have to fail from a higher level. But if it catches a bid and it starts pressing above 135.50s, then next stop are 139s. This is from a bigger picture. From an intraday perspective, just look at how we close inside here, but I think it's 135s, 134s. It's a big chop range, so we really need to see momentum outside of this range to make a bit of a, to get a clearer picture. But broadly speaking, the broader ranges, the 132 to the downside, are still in play. No change with previous outlooks in the videos. USD JPY. Again, not a super interesting chart for me, but I just posted this again because everybody was getting really excited every time we test this 200. So I said, keep in mind it's a pivotal level and you have to respect it, right? Simply because we bounced off quite aggressively last time, and then right here we came down into it and we started to probe below. It doesn't mean it's the end of the world. A lot of people tweeting me saying, oh, this is going down to 95, 93, 92. Well, maybe, right? But what you have to keep in mind is that this is an important level and that you've got a strong support here. So if you're aggressively short, you need to be taking some profits, most likely. That's a percentage play into this level. Now, let's see how this plays, but just keep in mind, it doesn't mean it can't go down, but there's strong support here. So unless we clear the 96s aggressively and close from a daily perspective, I think it's too premature to call a move back into the 93s, 94 base, which is possible, but we need to tackle this very, very strong support. And as long as we can't close below this 200, well, it's chop inside this range, inside these whole 99s, 97s range. So, but you have to respect that 200-day. No matter if it's being violated or not, it will have different degrees of importance, but you still need to respect it, okay? Aussie, again, very rare to see such a nice little confluence zone here. We had a nice confluence of the 50 back of this move from highs to lows, all the way back down, 50 back confluence with a 200-day. Very clearly focal point for a lot of people, a lot of size to get short on this area. Bam, pierced it, very pure, can't say anything else. Would I be going into the week? I'd say, these 95.20s is this previous swing high. This is really the key level. As long as we can't break back below there, I'd expect us to try and see a test back up into the 97s. If we break and get a daily close below there, then I would not be surprised to see a move back into the 93.30s. That's really the key pivotal level. So right now, this is where the longs and the shorts are going to be fighting it short term this week. 95.20s to the downside, and these 97s to 10s or 20s, if you want to call it, to make it easier to the upside. That's really the chop range. We need to start to get daily closes outside that to really likely get some more momentum into the market. What do we got? Euro and cables. Trying to go quickly here so people don't get bored. People like these to be as quick as possible. What's going on in the GBP USD? So basically no change. It's still in play for the high range. Reminder, we've been calling for a 163.50 since, we pressed below those 51.50. So really no change in outlook here. It's struggling. I mean, is it a surprise it's struggling here? Well, not really, because if you see how many times it got sold in the past ahead of this level. So it's not surprising that it's struggling here. So we got some data coming out. We'll have to see how we behave. If you look at it on a 4-hour chart, well, basically this is pretty much the chop range I'd be looking at, right? If we don't, as long as these, this is really money lines, 59.30 into 58.80s, as long as this level doesn't get broken and we get daily closes below, this will likely hold a bid tone. But the more it gets tested, the weaker the level will tend to be. But so far this has been very, very strong. So this is the base support, the bigger support, and the bigger resistance is those 63.50s, right? So this is the chop range. So clearly here, if you're looking at it just in terms of something like pot odds, right, clearly there's the pot odds favored the downside, not the upside. That doesn't mean I'd be shorting here necessarily, but keep an eye on how we open at the beginning of the week here. As long as we hold this whole series of higher highs here, then I think the path of least resistance, at least short term, will be to try to test those 62.50s, those recent highs, and then we'll see how we deal with those. If this breaks, this whole zone that's been supporting it recently, if this whole area support breaks, well, then we'll likely try and make a run, at least first of all, into these 60s, this 200 on the 4 hours coming in line. So, but again, chop inside this range. And what's going on euro? Well, euro, again, no change on the weekly, still in play for high range. As far as we're concerned, the high range is 140, 141. We've been talking about that since those 128s, multi-confluence level for a lot of things. That fib is coming in there. Then we had the long fib here, with which the confluence of the 100 and the 200 on the daily, that's played out, that's finished, done and dusted. So very, very nice long trading, very well supported, extremely technical. So right here it's holding above the breakout level, so it's still constructive. Now it's struggling here at highs a bit. So the big question is the same thing. It would be healthy to see some kind of retracement, but what I would say going into the week, as long as it holds above this breakup point, which essentially is the 137s, this could easily continue to move up in extensions, right? If it starts to get unloading, people booking profits below that 137, then we could see a bigger correction back down into the 135.50s, 134.50s. It would not be surprising. It would be healthy to see that kind of correction, but that would be the base support. And here are last week's highs, but really, if we start, I think pretty much what everybody's been looking at was protection of those 138.50s. So what you've got to say going into the week, resistance 138.50, support that 137 and that's a big chop zone, and you'll have to see momentum outside those areas, see daily closes outside those areas to get a bit of more move. But right now it's just chop. The bigger outlook across the board hasn't really changed. The market is just chopping around a bit, so we need to see some more flows coming in, some more volumes pushing things around to get some more action, some more volatility for us to trade. So guys, I hope you enjoyed the recording. I hope everybody has a great whatever's left of your weekend. If you like the content, don't be shy about sharing it. Subscribe whatever to the YouTube channel, to the blog if you want to get the updates straight into your inbox, or just show up on Twitter and pop on the blog every now and again, and you'll see whatever I'm talking about. Have an awesome one, guys. Have a great one. See you guys for London Open. Take care. Bye-bye.